Welcome to the Mortgage Hot Mic podcast with Kiel and Holly, episode 9, Saving Time and Money During the Mortgage Process. I'm Holly Ecimovic, licensed LOA and loan processor with Edge Home Finance.
My name's Kiel Ecimovic, and I'm a loan officer, and I work with this lovely lady who's also my wife, and I'm here to help you get into a home, save you some money, maybe save you some time as well.
Yes, so let's get started. First off, we're going to talk about what is the benefit of working with mortgage brokers like us, Kiel?
A few things. We're more flexible. I'll give you an example. Yesterday, the Federal Reserve made an announcement, and that affected rates. I can go shop through multiple lenders, see who's still available and offering the best rate while everything's either going up or down, therefore saving you money. And it also saves time because now I can jump on it and keep things moving. And of course, you know that it's just me. I'm not some big box bank. So at the end of the day, I need to make sure that I'm successful, because if I'm not successful for you, then I'm not going to get any more business. And then that's just the end of me. So you can say that fire's lit under me, and pretty much any other broker, I would assume as well.
So what is one thing right now that a potential home buyer should know in this market and in this climate?
Well, the rates are a little higher, unfortunately. That's what everyone keeps saying, but things are happening. There's a lot more volatility now. So one day you might see the rates 0.5% higher than they were the day before. So constant communication. You don't have to constantly call your broker, but stay in touch with them. Find out what's going on, get a vibe of what's going on, pay attention to the news, because that does have an effect on things. There are things that are, you don't want to hear about in the news, but let's be real here. It does have an effect on the business climate, and it can affect how much you have in your pocket or what your rate's going to be. Sadly, bad news is good news for mortgage rates. You don't want bad things to happen to anybody, but let's be real here. If you had something like a 9/11 style event or anything like that happen, it does help the rates. Bad day for the stock market is more a common aspect that comes into play. There's not a 100% guarantee that's going to help out, but it's something to consider.
So Kiel, tell us one recent experience you had where you were able to actually come through with a client that perhaps had a different experience with their loan, where they had to kind of save the deal and
I feel like that's how I get most of my business, actually. You might go to so-and-so lender or bank, it doesn't matter who it is, I guess, because they might not have all of the lenders I have access to, or maybe they didn't work as fast or didn't ask all the questions. So one of the things I like to do is I treat it like an interview. Straight up. I'm not going to just say, okay, on the application, when were you born? How long were you working here? Like, get some background. Talk to the people like you know them. Like, all right, well, you've been working here, and like, how long have you been in this line of work? These are all questions that are on the application, but you have to get people talking. There has to be some engagement versus just look at a piece of paper, type into a computer, and let's see if we can make this work. That's how a lot of these call centers operate. I wish I had a better answer in that. I've seen it with my own eyes. I'm not saying everybody that works in a place like that is going to do business in that way, but it seems like it happens a lot. Or else there are a lot of deals I wouldn't have gotten, plain and simple, if that answers your question.
So we're going to move on. I would say, what would be one thing you would tell someone who is a first-time home buyer that is working with a mortgage broker?
Well, most people aren't familiar with working with brokers. I mean, they have a small sliver of the overall market. We're talking no more than like 20%. Most people think, hey, I'm going to go to my local bank or credit union. Not saying there's anything wrong with them. Everyone excels in their own areas. Like with a broker, though, we're just doing mortgages, straight up.
Right.
That's it. We're trying to find any way we can do the deal quicker and, of course, save you money. So then you're thinking, wow, I've never heard of that guy before, but he did a good job. Hey, maybe I'll tell my friend about him. So a lot of it has to do with word of mouth, or maybe even doing a podcast like this, trying to change things up just a little bit. But that's my 2 cents, if that answers your question. As a processor, for example, what are you looking for out of a file or your clients to help make the process smoother, so that if it's smoother for you, obviously it's going to be smoother for the client. As I like to say, if you're stressing, we're stressing. We don't want anyone stressing. Life is crazy enough as it is. But seriously, what do you think?
Yeah, so I would start with this. just know that right up front, we're going to be requiring a lot of paperwork, and don't be surprised by that. We'll communicate with you right away as soon as your file begins and let you know everything that you're going to need. And I'll go over every document with you that you might not understand, or you might not know how to obtain that document. We can get that off your chest. It will be not an issue. So I think the key thing is to communicate with your processor and getting documents in on time so you can close on time, and everything will go very smoothly. Being organized is super important during the home loan process, and certainly we're going to be organized as possible for you. And if you keep your documents and all of your emails in an organized fashion, you're going to have a very successful experience.
One thing I think is important after hearing you say that answer is, let's say you're buying a house. Think of this as you are the client. We're your legal team, if you will, over here. And we're here to present a case of why you should get a house. And we're presenting this to the judge, jury, and executioner, aka the underwriter. And we need to say, look, we have all the evidence right here. Approve them so they can get this house. That's one thing I like to tell everybody, because we're your advocate. Like loan officer, processor, those are fancy names, I guess. But at the end of the day, we're here to help you out. We're working as a team. If we don't make the deal work, then we arguably did everything for nothing. It was great, hanging out and everything, but you want to get a house. There's a reason you brought us into your life to help you out.
Right.
So that's one thing I wanted to piggyback on, if you will.
Definitely. We're here for you. We're here to make everything smooth and easy for you, and to close on time, and to get into the house that you desire.
Well, here's the other thing too. If we can do it quicker, let's just say we have everything ready to go 2 weeks before closing. Now you can negotiate with the seller, like, hey, maybe we can, get some kind of concession, maybe we can get something done. Because we're already ready to go on our side. Practically we're waiting for you. That may or may not make a difference, but now you don't have to stress about getting any additional paperwork. And honestly, it puts more power in the hands of the buyer in a situation. What if, God forbid, the seller makes a mistake on this, that, or the other, and they have to extend things? Like, well, we've been waiting for you. Maybe there's a concession that can be worked out. You never know, because usually we're defending or working with the buyers, that is. So we want to empower them as much as possible for what it's worth. In terms of processing questions, one of the things that you always try to do is you want to obviously get the job done, but what are things that may not be asked by most lenders of their clients that you ask for to help save them money and save time in the process? Like when we ask for the last pay stub at the end of the year, that kind of stuff.
Yes, for example, that's a great example. The end of the year pay stub. That could also prevent us from having to further obtain another VOE or something like that. Also, too...
What is a VOE? I don't mean to interject, but just so the audience knows.
A verification of employment document that would have to be signed and dated by the employer.
And what do the employers like to charge? Money.
Yes.
To give up this information. Even though you work there, even if they're friends and everything, they're still going to charge. Yep, $100 a pop. That stuff can add up.
It can definitely add up. And not always is there a charge, but sometimes there is. Another thing that we like to do ahead is we like to talk about the survey. We like to gather invoices. And when you have a credit pull, we're going to put aside the credit invoice and have everything organized for you. And we like to just ask for anything up front, organization-wise, documents that you may have, so that we can ask for less things down the road.
I feel like we're giving up a competitive advantage with everything we're talking about, but I will add this. Refinances are probably going to be becoming a thing in 2024. Maybe even earlier than that, you never know. Hold on to things like your survey from when you purchased the house, your owner's title policy. It's going to reduce your closing costs, saves you money. That's either more money back in your pocket, or maybe you're getting more money back, or just less into the banks. Plain and simple. That's more of a title company charge, but it's something you have to deal with. Save that stuff, for example. What other items do you think would help out, for example, because we deal with a lot of self-employed borrowers here in Florida. So you're writing off a lot of stuff. What's an easy way of saying, I wonder what my income is as a self-employed borrower? Is there an easy answer to that?
So when it comes to self-employed income, we're going to usually ask for different documents than if it's someone who's working in W-2. So I would say just be really, really good about keeping your records. And when asked to submit, when you get those over to us, it may take just a little bit more time to go over those. Mm-hmm. So if you do have as much detail as possible, let us know that right away.
Yeah, because a lot of times we're going to look at the taxable income without me getting to the nuts and bolts of what's in your tax return. But there are other things we can add back in, though. But that's the easy answer I would like to give, though, just to kind of sort of piggyback on what you said and to answer partially my own question. Because everyone's always saying, well, what is it? Oh, I grossed this much, but I wrote off this much. Just look at that number. And it obviously depends, if you W-2 yourself and so on and so forth. Probably bore everyone to death with all the nuts and bolts of going through a tax return. Very exciting stuff if you haven't noticed already. That's why most people pay others to do their tax returns. It takes so much time. It is what it is. But I'm sorry, I didn't mean to take over like that. Oh, no. Yeah, but what else can help? Because one of the things, what does a processor do? Because people are wondering, okay, well, what are you processing if you're a processor? What exactly are you doing behind the scenes? Because most people are talking to the loan officer,
right,
and then they talk to you some, and they're like, okay, I wonder exactly she's doing back there. Could you elaborate?
So when the file comes in and we are set to go, like I said, we're going to request certain documents from you, and these are conditions that are issued to us by the underwriter. So the underwriter works for the lender and they are gathering everything needed to close. Why do we need these things? Because we need to prove that you'll be able to pay the mortgage, so we require certain documents. So my job is to obtain these documents, work with you, the buyer, to understand what they all are, and if you have a question on how to get those documents, I can help. And then we're also working behind the scenes to get things like verification of employment, invoices like I was talking about earlier, and we also have to be able to, at the end of when you're closing, we do another credit pull. And these are what?
Well, we don't do, no, it's not another credit pull though, it's just they're just making sure there were no other credit pulls done.
Yeah,
it's
so
a soft pull.
So
it's a soft pull, if you will. I know people will be like, oh, another hard pull, because I was like, just.
I thought the lender. This is just X'd out.
No, because what they.
I thought the lender.
No. What they do is they have a monitoring service to see if any other credit pulls took place. There actually is an interesting Florida story behind all of that. So one of the things that you will encounter when going through the process is they're going to have you sign a document called the credit inquiry letter. So what is that? They're going to have, okay, well, we had all these credit pulls done. What's the reason for them? Oh, I was buying a new car. I was thinking about refinancing my house. I was lender shopping. There's a reason for that form, though. Leading up to 2008, you would have somebody come into a lender and maybe they get a pre-approval letter. And then they'd go hit up every builder in town and get a house started, maybe put down $1,000 or $5,000 or whatever it is, and they're getting a $400,000 house. I'm just using this as an example. Well, they try to stagger it out where this one's going to close this month, the following one's going to close the month after that. They stagger it all out off of one pre-approval, and nobody's checking for that. So if you happen to be, let's say, a realtor or you're flipping these houses, you could make a killing. But then what did that lead to when things slow down? Now the builders have built all of these homes, and now nobody's actually buying the homes. So now they're expecting to make $400,000 off this house. The guy just gave me, let's say $5,000. Guy's just gonna walk away from it. He's like, screw it, I made my money off the other ones. It was fun while it lasted. So then you ended up having these whole neighborhoods in Orlando, for example, and mainly in South Florida, where it was the biggest problem. They were just empty. It was like a ghost town. That's why they rolled out all those down payment assistance programs, so they can try to get people in there so they can at least maintain the homes, not have them get infested with termites, have the grass, 3 feet tall, have the animals in the woods retake all of these neighborhoods that were literally just built. Right. So that was the domino effect of it, and that's the shortest way I can probably put it. But that's one of the reasons why they ask about that stuff now. And you think, Kiel, that's very overly simplistic. There's still ways around it, perhaps. But if anyone tries to pull anything like that off now, it's almost guaranteed to get caught, because now the lenders have their antenna up looking for that, because they don't want to get screwed, nor do the builders. And of course, the law has gotten involved to top it all off for what it's worth. Pretty crazy, huh? And
Yeah,
the
definitely.
biggest problem was in Florida, though, namely South Florida, is what led to that document being created.
Yeah, so just to talk a little bit about what a processor does. So the loan officer has negotiated and constructed a fantastic deal for you, Kiel. So now I am now getting your file into underwriting. We're going to be the processor myself. I'm going to be asking you for a ton of documents. It is just standard.
It's not that bad.
Don't be alarmed by it. And I'm going to facilitate you getting those. If you have a question about how to obtain it, I'm going to be doing things like verifying employment. And we also organize the invoices that go into this, a survey invoice, a credit report invoice. And we also, we're going to talk a little bit more about inspections of the home.
Who all do you deal with? You have to talk to a lot of people behind the scenes.
Yes, we also speak very closely with the title agent, especially towards the end of the process when we are about to close. We're balancing the fees and we are collecting title work for you, the title insurance
Don't sell yourself short. You talk to a lot of agents. Who all do you have to talk to?
And insurance agents as well, homeowners insurance. We gather homeowners insurance quotes for you to look at. Of course, you can always choose your own homeowners insurance. And we're basically trying to help you out with every step of the way and make it as simple as possible. And basically, we, as processors, myself, are getting everything organized to submit to underwriting so the underwriter can approve everything as quickly as possible to get you to close.
Holly is just being way too humble over here because a few of the things we have to do is like calling the county.
Yeah.
I mean, let's say you have a septic tank, or maybe if it's one of those areas like, let's say Maitland, for example, where there's an area that they have all septic tanks, but everyone else is on city water. Then you're trying to make sure, okay, is this on septic or not? Do I have to get an inspection for that? Do I have to be mindful of this? Is this something that it's going to be my responsibility? We look into that kind of stuff, and sometimes the answers are not always clear, even if you do your due diligence. So what do you get to do? You get to make some phone calls, and then not everyone knows the answer, so then you have to go through 10 different people at the county or city, or my favorite, you think it's listed as a county address, and then you end up finding out, oh no, the city takes care of that. Oh no, but the city takes care of this aspect of it, and the county takes care of that aspect. You're like, okay, so these people are getting double charged by the county and the city, which leads, that's very rare. But these are the kind of things that we check into, not just to make sure that you know what you're getting into, because at the end of the day, we know this is the biggest investment for you.
Right.
So out of respect, the least we can do is make some phone calls. And I mean, 95% of the time, everything's figured out pretty easily. We can do some research, maybe make a phone call or two, and that's that. But it's not simply just us crunching numbers behind the scenes and then Kiel locks your rate and like, okay, bye-bye, talk to Holly.
Yeah, and press a button and it's...
We press a button and magically, ta-da, mortgage, now I have a house. And this is all that, the only thing that mattered was the interest rate. There's a lot more that goes into it to, be brief, if you will.
And two, we want to add too, if it's an HOA involved, one thing that I will do is I will obtain those HOA documents that are needed. Oftentimes that could mean tracking down specific individuals for the HOA to find the document and get it for you. That's another processing job.
Oh, trust me, it gets pretty wild having to hunt people down for the HOA. I mean, some HOAs are great. If you're an HOA representative and you do your job, we do appreciate it. Sadly, that's not always the case. I can't tell you how many times we've gotten everything done, let's say within 2 weeks, appraisal, this, that, and the other, everything's done. And then we're waiting for the HOA to respond. And then we get an answer like, well, we only communicate with people once every 30 days. And they'll have something like that on their website, and then nobody will answer the phone, or maybe they only communicate through snail mail correspondence. I'm not even making this stuff up. Like, even with all the technology that we have today, even with everyone's contact information, they just say, I simply don't do that.
But I will add, when faced with this challenge before, we have always come through every single time.
I'll be stressing for you, and so will Holly, trying to get that squared up.
We make it happen.
Yeah, we don't tell you. We may not give you the play-by-play on all that stuff because we're knocking that out. Because if you hear that, you're like, oh my gosh, what's going on over there? It just sounds like there's this controlled chaos at best. That's pretty much how every deal goes. I don't care how smooth the deal is. There's some weird stuff going on behind the scenes that nobody knows about. And if you heard about it, then you'd think, oh my gosh, why am I buying a house? There's nothing wrong.
Our job is to make you not hear about it and not stress. And so that's part of what we're doing.
So we try to keep it short and sweet if at all possible. I know I talk a lot, but I'm just trying to give you some background for those who are watching this.
For sure. We have the stress handled for you, so you don't have to stress.
Yep, this is very true.
Yeah.
What else would you like to talk about in the process?
I would like to talk a little bit about inspections.
Okay.
And let's say someone is buying a home for the first time. What do they necessarily need to know about inspections, Kiel?
As in terms of a home inspection?
Yes, and how that is different from the appraisal.
Okay, so you have the appraisal, and then you also, and that's something you have to deal with no matter what. You might get an appraisal waiver. That's a whole other conversation, I suppose. But one thing I'd always recommend is getting a home inspection, but not just the home inspection. They have the 4-point and they have the wind mitigation. So the whole point of me bringing that up is you can literally have the home inspection done and keep that to yourself if you want to, but the insurance companies are going to want the wind mitt and the 4-point because that's going to answer the questions that they have, and a lot of them won't even bind your insurance anymore without having at least that much information. Before, we had a little rash of hurricanes hitting us. We went 10 years without one. It was almost like a free-for-all. It was like, oh yeah, but you're getting a house, it's this old, great. Here's how much the insurance is going to be. You're like, oh, it's $1,000 a year. Like, that's nothing. Of course, a lot of people are paying a little bit more than that now because, events such as that. And a lot of people weren't providing these inspections that help the insurance agent give you a more comprehensive coverage. The good thing about having that done, though, is you might actually save yourself a lot of money. For example, they won't have to go with assumptions. They might say, okay, actually, the roof is properly secured to the house. The windows are up to code. Because think about how many people live in houses that were built in, let's say, 1975. Well, do you still have all the original stuff on there? No, of course you don't. You put a new roof on there. You probably upgraded the doors, windows, probably even the garage door. I mean, the technology's improved quite a bit since then. The quality of the lumber, for example, might have been better than what you see on a lot of the newer houses now. And I'm not saying anything bad about new houses. Let's just be real here. It was just different back then. So if you take an older house, you do all these upgrades, now you can drastically reduce your insurance costs. So you don't have to assume worst case scenario. Otherwise, that's what they're going to do. Plus, you're going to know what you're getting. Wouldn't you want to know if the house has any damage to it? Would you want to know if the guy did a questionable electrical job? Like he took an old extension cord and shoved it down a wall. I've seen some strange stuff.
You want to know what you're.
Does that house even have support under it?
Right.
Why is that?
The plumbing, even things in the walls. And
does it even drain? I'm just telling you.
Excellent idea to get inspections.
Highly recommend.
Highly recommended.
It'll answer a lot of questions. And it's worth, dropping a couple $100 for that.
And
it's
it
totally
could
worth
save
it.
you money. So.
Plus, you know what? Despite it all, what if you do find something on the inspection report? You don't have to be the one to bring it up with the seller or the agent. So you can say, well, this guy said it. He does it for a living. And if I'm going to buy your house, you need to take care of this. You might get a better deal. You might get a new roof out of the deal. Who knows? I mean, every deal can be different, but it gives you an additional card to play at the table. Think about this. It's a poker game, really, at the end of the day. You want to make sure you have as many cards working in your favor as possible.
True.
That's one simple way of putting it. I mean, such is life, right? It's business.
That's true.
You're looking out for yourself. The better deal you get, the stronger position you're going to be in, the happier you're going to be. And just think about, you do the deal right, it could lead to you holding onto that house, maybe renting it, and then maybe purchasing other houses down the road and then stacking them up and playing the game of Monopoly in real life, if you will. Now you can go hang out on the beach all day or play golf, whatever your thing is, or start a business. Could be happier. You never know.
You never know.
It's another option, and it's America. We should have some options here, I would think. That's one of the things we signed up for, right? But anyway, just my 2 cents. Sorry about the rant. There's so much we can talk about when it comes to mortgages.
Yes. So
Or
when it
stories.
comes to saving money and time during the mortgage process, working with mortgage brokers like us, what is one facet of that you have to touch on that we haven't talked about already?
Aside from that, we can do the deal quicker. We have more options and can save you money.
Yes.
A guy like me lives around here, so I can meet you in person. You're not just talking to some guy on the phone in a call center.
Definitely.
Although, even though I put the option out there, no one ever really wants to meet up, but the option is there, and I'm going to try to show up to your closing so I can at least shake your hands like I'm the guy that was, on the other end of the phone. You know where I live, you know where I work, and you know that I'm approachable, and you'll be able to recognize me on a street corner or walking down the street, maybe more appropriate. But those are a couple things that I can say. Plus, you're keeping everything around here. You're dealing with people in your community, and I think it's more personable to top it all off.
I agree.
But if you're just simply just trying to save money, we have you covered there. Because what did they used to have that commercial back in the day? Was it for like Bankrate or LendingTree.com? And it'd say, "Oh, the banks are all fighting for your business, blah blah blah." Well, you get a lot of misleading information online. Sad but true. I wish it wasn't that way, but that's just the way of the world and the internet, in more particular. But with us, they're trying to win over our business. And of course, the better deal I get, the more likely you are to come to me. So really, it's like I'm doing having all these people coming at me. Hey, check out this deal we're doing. Hey, check out this special we're doing. Hey, we're waiving the underwriting fee. An underwriting fee usually costs about $1,000 depending on the lender. But these are things that will save you money. What can you do with an extra $1,000? I don't know.
Right.
Pay off something.
A lot of stuff.
Fix something on the house. Fix something on your car. Have a fun day at Disney. I don't know, go on a trip. We could do this all day. It's your money. It's your life. I want you to be empowered with having that in your pocket because it's going to be better with you making the decision than some bank making the decision for you. And that's probably one of the biggest things that we help you out with is because by giving more of that energy, i.e. money back in your pocket, that empowers you. You get to make more decisions. You're going to be a freer person. You're going to be a happier person. I think that's American as apple pie, right?
Sure. So one question I have too would be for someone who would like to get an investment loan. So you're going to be getting a home loan to have a property that you rent to make money off of, rental income. Can you talk a little bit about those type of investor loans?
Oh, there's a whole lot of them. One of them that a lot of people have been asking about lately are what they're called DSCR for short, but really it's just a cash flow for your rental program is the short answer I like to give to everybody. You put 30% down in most cases. You can buy a short-term rental. They just assume, hey, we're gonna send out the appraisal. Maybe they think that you're gonna make, I don't know, $2,500 a month off that. Well, if the mortgage is $2,500 or less per month, then you'd be qualified as long as you own another property and you're up to speed on all of your mortgage payments. They don't even look at your income,
right?
Your employment history or anything. It's like, okay, so you're gonna be an investor, great. You're like, wow, well, Kiel, that seems a little light on the questioning. So why would they do that, especially after what happened in 2008? Or are we trying to avoid that? Here's a major difference. In 2008, for example, you could put 5% down and get an investment property. Now the minimum you have to put down is 20%. If you're putting down 30%, 20, 30%, the actuaries, if you will, have determined that, you know what, if this had to be foreclosed upon by the bank, God forbid you're ever in that position, my asterisk, then they would make their money back. They wouldn't take a loss. I mean, a traditional mortgage or a true conventional mortgage is putting 20% down. That's the way it always was until they rolled the FHA program out for GI Bill after World War II. So all that stuff is kind of new, like mortgage insurance and all that relative to the whole history of mortgages. So that's why they always wanted 20%. That's why home ownership numbers used to be so low, because you have to save up 20%. That's a significant down payment. I don't care what point in history it is. Even if the houses are $1,000, you probably weren't making as much money back then. I mean, people used to make like a couple $100 a year back, 100 years ago. If you don't believe me, look at a history book. But that's my 2 cents regarding that.
And I know some people had questions about, well, how many of those home loans properties could you get a home loan for an investment loan?
It depends on what type of loan we're doing. I mean, a conventional loan, I mean, you can have up to 10 loans going against like Fannie Mae and Freddie Mac. They're the two biggest purchasers of mortgages in the country. And that's what's considered a conforming loan. I don't mean to hit you with all this jargon, but the point that I'm trying to make is most people, when they think conventional loan, FHA loan, VA loan, USDA loan, they're being sold to those folks. But they also have some that are outside that box, if you will. They're considered non-conforming. You can have as many as you want. So if you want to think about it this way, what do some of the wealthy do? They'll buy a property, leverage against it, get another one, maybe do an investment loan, get someone renting it, have some take equity out of that one, acquire another one. So yes, they might be carrying around a lot of debt, but they have the cash flow going on that offsets that, and you have someone else making those payments for you. So therefore, you're getting more equity over time, compiled over more properties. So you can do that theoretically as many times as you want. Some lenders might set limits on what they would do, but most of them will say, well, you're paying your bill, you have a good credit score, you have plenty of reserves so that you can pay all your bills if you have a rainy day, God forbid, and you have plenty of equity, so if the house of cards, if you're living like that, was to come tumbling down, hey, we make our money back and the bank's happy. And last I checked, I don't think the banks like to make bets that they can lose. Now, you might say, well, Kiel, what about what happened in 2008? Yeah, it's because they bailed them out. I mean, wouldn't you make a bigger risk if you knew someone was going to hook you up? Just think about it. Hey, I just got my first new car today and I wrecked it. And your mom and dad say, I'm sorry, honey, here's another one. Okay, I'm going to go speeding again probably. I survived the first time. You're not even thinking about the second time at that point. I mean, this is like the moral hazard argument right there. And I don't mean to get into a whole economic spiel, but let's just think about that. If you go down that rabbit hole for quite a bit. But anyway, I'll stop with that. If that answers your question.
Yes, that is.
Maybe a little more you're expecting me to go on a rant about, but I can't help but go to that thought process.
So Kiel, do you have any questions?
I have a lot of questions, but how about why don't you do business with me? I'd love to do business with you. I have a wife, Holly, have a family, you gotta support them. And you know what? I'd like to meet you and help make that dream of home ownership possible. And you might not even forget my name because, well, how many Kiel Ecimovics are there? I might be the only one. You're speaking to the one and only right here. And then maybe you can even shake hands with me at some point. Who knows? I'm here to help. Do you have anything that you'd like to talk about that maybe we haven't covered? I know you have to talk to a ton of people. I know that you have to organize the paperwork. I know you have to go back and forth with the underwriter and the closing department. Because there's a total of about 50 people involved in every loan. I think with every transaction that takes place on average, I think it employs 56 people. So a driver of the economy is buying a house. It's huge.
It's quite a big endeavor. A lot of hands on deck, a lot of hands in the process, a lot of different companies and organizations in the process. It's not just loan officer and realtor. You
know what's wild is that you would think right when the file closes, that's the end of the story. Right. That's only 40% of the story. Most of what happens is everything that's happening behind the scenes. You don't even know anything about it. People are having to make sure that it audits properly. One of the things we have to be mindful of, I just want to throw this out there, is that at some point probably every file is going to be audited. So one of the reasons why we ask so many questions is because everyone's walking on eggshells. The last thing you want to do is do something wrong. You could lose your license. We could face jail time, fines. I mean, you could have your clock cleaned by the federal government. There are so many ways they can really get you. I mean, I was even talking earlier this morning about what happens if you do get audited, as an example. As a lender, I have to pay the federal government to do that. It is not in my best interest to make any mistakes. And I have to, so I not only have to get you a good deal, but I have to make sure everything is properly legal, because if they come into town and they want to go through my records, I have to pay for them to eat, for them to sleep, for them to, well, the whole time they're there, everything that they charge, I have to pay for. And I don't know if I'm gonna have the guy that wants to go clubbing or anything. He might just say, hey, he was there to get pizza and it cost him $300. There's really no oversight on that. You might get that guy. Hopefully you don't. Hopefully that never happens to anyone, but that's something that literally could happen to you. So these are the kind of things that the lenders are having to be mindful of. So it's not that we're trying to ask you a bunch of questions because we want to make you feel uncomfortable and provide, a blood sample and a hair clipping is what everyone likes to jokingly say to me. Oh, like, what about my firstborn? It's like, trust me, it's like, I really don't want to be that intrusive, but the purpose of us doing that is to make sure you get into the house and then they don't ask you any questions either. That's the last thing I want you to do. If anyone's asking any questions, it might as well be me. You know who I am, you know where I work, you can find me not only here on this website, but you can call me and I'll even meet up with you. The federal agents, on the other hand, you do not want them knocking on your door, and I don't care who you are. Even if they're just asking for directions, I'm sure you're probably gonna have a heart palpitation upon seeing a badge. That's just probably how I would feel, even if you did nothing wrong. Even if it's like, hey man, how you doing? My 2 cents, if you will.
Well, thank you so much for joining us today for episode 9 of the Mortgage Hot Mic podcast with Kiel and Holly, saving time and money during your mortgage. I'm Holly Ecimovic, licensed LOA and loan processor for Edge Home Finance.
And I'm Kiel Ecimovic, and be an honor to help you get into a home. Thank you very much.
Thank you.